In our earlier two presentations, we have learnt about basic salary, leave salary, gratuity, and pension. We'll take another variant of pension here, that is the National Pension Scheme, which we usually call as NPS. Now, National Pension Scheme applies to all those employees who have joined service after 1st January 2004. Whether you join a government service or you join a non-government service. But in government, it is mandatory for employees to contribute 10% of salary every month towards NPS. For a non-government employee, an employee may choose to have NPS or not, but a government employee mandatorily has to contribute 10% of his salary towards NPS. And when we talk of salary here, salary means same as leave salary. That is basic, that is DA, conditional, commission, conditional, a part of the turnover. Right? So commission is a percentage of turnover and DA, it is a part of salary. So as much as DA is a part of salary, we have done questions before, 30%, 20%, 40%, whatever, that much of DA we shall consider for the purpose of deductions. So how do we deal with NPS? NPS is a scheme where employee contributes 10% of his salary towards NPS and employer also contributes a percentage of your salary to NPS. So when we talk of NPS, let us say we have basic salary, we'll again stick to same figures, and then we have say DA. Let's now consider DA as part of the salary. Earlier we have been taking not a part of salary. Let's now say DA is a part of salary. So part or not a part, it is anyway a part of gross salary. Now we have NPS, National Pension Scheme. In National Pension Scheme, the employer, whatever is he contributing, now naturally what employer contributes is your addition to the income. So employer's contribution will be added to your salary. See, you have it here. Employer's contribution is first included in the salary of employee. So whatever he contributes, will first include it in your salary. Subsequently, all employers' contribution, there is a deduction available under section 80 CCD subsection 2. But it is limited to 10% of employee's salary in case of a non-government employee and 14% of employee's salary in case of a central government employee. So you get a deduction of 14% of your basic DA and commission if you are a central government employee, otherwise you get a deduction of 10%. So if we have here, let's say whatever figure of gross salary we happen to calculate, on this we shall first compute net salary, and on net salary we add income from other heads, whatever head it may be, when we have gross total income, GTI. And on this, now we give less deductions. And one of the deductions that we are talking of here is 80 CCD 2. 2 means employer's contribution. And this will be deductible up to 10 or 14%. So let's say here, employer's contribution towards your NPS is say 40,000. Right. Now, basic and DA. Both are, DA is a part of salary. So we have 1,20,000 and 12,000. So your total is 1,32,000. And if it's a case of a non-government employee, 10% of this is 13,200. How much of deduction can you get? You cannot get a deduction under 80cc2 for more than 13,200. Why? Because it cannot exceed 10% of your salary. He can contribute more than 10% of your salary, but your deduction cannot exceed more than 10% of your salary. So, employer's contribution deductible up to 10%. Whatever he contributes, included in salary. Then your contribution. You also contribute 10% of your salary. Now, your contribution is also deductible up to 10% of your salary. So, we have here, your contribution is considered under CCD1. So, under CCD1 again, you have a deduction of 10%. 13,200 will be deductible under 80cd2 and 13,200 will be deductible under 80cd1. But CCD1 is clubbed with two more sections for the purpose of maximum limit on deduction. That is 80C and 80CCC. So 80C, CCC and CCD1. We'll do C later at the end of the chapter. CCC you will do when you do the chapter on deductions. So 80C, 80CCC and 80CCD1 together cannot be more than 1,50,000. So if we have 80CCD1, 13,200 and we have 80C worth, let us say 1,40,000. So together these two cannot be more than 150. So we shall restrict these two to 1,50,000. CCD2 you can get additional. It's employer's contribution. Whatever he contributes first gets added to your salary and then up to 10 or 14 depending on the nature of employment you get the deduction. And CCD1 again your contribution limited to 10% plus 80C. Not to exceed 150. Additionally, on NPS, you also get a deduction under 80CCD1B, and that is 50,000. So you get an amount of deduction under CCD1B worth 50,000. So that is an extra section. CCD1. So if you have a figure of your contribution, let's say you contribute 60,000 to NPS. So what you should do is, you should first give deduction under 80CCD1B. That's the first thing you should do. Take the maximum benefit of 50,000. And the remaining you take towards 80CCD1. That's the right way to do, to get the maximum benefit of deduction. So out of 60, CCD1B you have taken 50 and then we are left with 10 more. So this will be 10. And we have 80C. So 80C, let's say, is 1,50,000 already, or let's say it is 140. So these together shall be limited to 150, but CCD1 will be 50,000. But if you have already claimed, if you have already taken the benefit of 1,50,000 under 80C by way of contributing another investment, then you cannot claim this 10,000 because now it becomes more than 150. 10,000 plus 150, it becomes more than 150. So then we cannot get this 10, or you just add them together and you limit it to 1,50,000. So that's how we deal with NPS in terms of treatment first in your salary and then giving deduction from your gross total income. Deduction is given on gross total income. See, we give it on gross total income. We don't give it on gross salary unless gross salary itself is your GTI, which normally doesn't happen because some part of interest all of us earn because we have bank accounts. We always have income from other sources. So salary plus other sources, GTI less CCD2, CCD1 to be clubbed with CCC and C and CCD1B. So we have an example here. We can understand the computational mechanics of NPS. Say X works with a non-government employer, which means the deduction is limited to 10%. on the part of the employer, CCD2. And he gets 40,000 per month as salary. The employer contributes 50,000 annually towards NPS and X contributes 1 lakh. So employer contributes 50, you contribute 1. His income from other sources is also 1 lakh and he claims a deduction of 1,30,000 under 80C. 80C cannot exceed 150. He claims 130. So if we compute his taxable income is what? We have done it earlier. Taxable income is gross total income minus deductions under section 80C to 80Q. Now let's see how we go about it. His basic salary is what? 40,000 per month. So 4,80,000. Employer's contribution towards NPS 50,000. Whatever he contributes, we will add. So he contributes 50,000, we have added 50,000. We don't have anything else in this question. We are going short to understand the concepts. This is gross salary. So gross salary is what? 5,30,000. Standard deduction, we have discussed earlier also, has to be given on salary, on gross salary. We always give standard deduction of 50,000. Standard fixed amount. So your taxable salary now is, this is taxable salary chargeable to tax, 4,80,000. On this 4,80,000, we have income from other sources, 1 lakh, we have it here. So the gross total income is 5,80,000. Now we give deductions on this. And we have deductions under 3 sections. By virtue of the fact that the employee contributes towards NPS, he gets covered under CCD1. There's also CCD1B. And by virtue of the fact that the employer contributes towards your NPS, he gets covered under CCD2. So first, as I told you, we should first give deduction under CCD1B. And the maximum deduction under CCD1B is 50,000. So we have taken 50,000 because he has contributed 1 lakh. So we can very easily claim 1B 50,000. Had he contributed only 40, then CCD1B would have been 40 and nothing would have been added to 80C. But since it's more than 50, maximum CCD1B is 50. Additionally, the remaining 50 can be clubbed with 80C to move on to the tune of 1,50,000. So that's what we have here. 1,30,000 plus CCD1. Now we can appropriate 50,000 towards CCD1 because he has invested 1. 1B is 50. We can take the benefit of 50,000 more, but this cannot exceed 10% of his salary. And salary here is just basic. We don't have DA, we don't have commission in the question. So it is 10% of 4,80,000. So 10% of 4,80,000 is 48,000. So you cannot claim CCD1 for an amount exceeding 48,000. Though we have 50,000 in hand for the purpose of claiming the benefit. But had his salary been more than 5 lakhs, we could have taken entire 50,000. But because his salary is 4,80,000, you cannot claim 80 CCD1 for an amount more than 48,000. So 130 80C, 48 CCD1, together 1,78,000. Done. That together this cannot be more than 1,50,000. C, triple C, CCD1 cannot be more than 1,50,000. So 178 shall be limited to 1,50,000. Then CCD2 relates to employer's contribution. And employer's contribution we have done. If you are a government employee, 14% of your salary will be deductible under CCD2. If you are a non-government employee, then 10% of your salary will be deductible under CCD2. So 10% as we have done here in case of 1. Similarly, we do for CCD2 also. 48,000. Employer contributes how much? 50. But we shall limit it to 10%. That is 48,000. So this is your gross total income and these are your deductions. See, we have three deductions. One, CCD1B, two, CCD1 along with C, three, CCD2. So this is the format of computing the net income. 580 less 2,48,000. Net income is 3,32,000. So that's where we are done with three very important pension retirement benefits: leave salary, gratuity, and pension. We now move on to the next component of salary, allowances. Allowance is always given in cash. You never have allowances in kind. Perquisites can be in kind. Allowances are always in cash. And it's a fixed amount. And why do you get an allowance? You get an allowance to meet certain specific, it's a kind of a reimbursement, you can say. It's not a reimbursement, but it's something that you get to meet certain expenses, to meet certain specific requirements. Like you get DNS allowance. Why do you get? To meet the cost of inflation. You get house rent allowance to meet the cost of rent if you are staying in a rented house. You get helper allowance. Why? To meet the cost of salary you are paying to the helper. Similarly, medical allowance to meet your medical expenses. Right? So, allowances are fixed amount of money. It can also be a percentage of basic again. We have done this earlier. Basic salary is very, very important. Everywhere we need to consider that. Now, for the purpose of understanding, we can cover allowances under different categories. To find out as to what will be the amount of allowance exempt from that, same rule, same method as we have been doing earlier. We have, let's say here, we also have, let's say HRA, house rent allowance. We also have education allowance. So what do? Keep on adding stuff as and how it appears in the question, but there will be an exemption on certain allowances. Certain allowances, no exemption. And certain allowances are subject to exemption. Like HRA, we have exemption. Like entertainment, education allowance, we have an exemption. So wherever we have an amount exempt from tax, we shall calculate that. But if it's, let's say, medical allowance, or let's say meal allowance. Now, meal allowance, there is no exemption. So if you get a meal allowance of, say, 12,000 per year, it is fully taxable. Like, see, here is fully taxable. We've not talked of any exemption so far. But for house rent allowance, we have an exemption. Education allowance, we have an exemption. So, we divide the allowances on the basis of the categories of exemption available. There's one category of allowances fully taxable. So, whatever is not covered here, by default is covered here. One exemption is based upon a rule. We apply a provision. There's a provision. Least of 1, 2, 3, as we have been doing earlier. There's a second set of allowances where exemption depends upon the amount spent by the employee. If I get 10,000, I've spent 8,000, exemption would be 8, taxable would be 2. But the amount spent should be for official use. I cannot get a helper allowance and use it for paying my domestic personal health. No, you won't get the benefit of exemption. So you have to spend the money for official use. Only then you get the benefit of exemption. So whatever you spend, exempt. Whatever you save, it's a part of your salary, pay tax. Then there's a third category where exemption does not depend on actual expenditure. Education allowance, children's education allowance. Let's say you get a children's education allowance of 1,000 per month. One child, 1,000 per month. Your annual income on account of children's education allowance is 12,000. Now on this 12,000, let's say I actually pay a fees of 14,000. So I'm getting 12,000, but I'm spending 14,000. So will my entire education allowance be exempt from tax? No. Why? Because here exemption is a fixed amount. You spend more, you get an exemption of a fixed amount, and that is 100 rupees. Just meager 100 rupees per month is exempt on account of education allowance. So these are the allowances, and here we have done, they're fully taxable. No provision for any exemption. So where exemption is based upon a rule, we have house rent allowance and entertainment allowance. Where exemption depends on the amount spent by the employee for official use, we have traveling and transport allowance, we have conveyance allowance, daily allowance, helper allowance, research allowance, and uniform allowance, where you need to pay uniform to your workplace. Where exemption depends not on the amount spent, but we have a flat amount of exemption. We have children's education allowance, we have hostel expenditure allowance, and we have transport allowance. They are the important ones. And the rest are fully taxable. See, this is how. It's a basic pattern of how your salary would be computed or appearing if you have allowances as a part of your salary. You have basic salary 10,000, you have 120. You are getting a DA of 1,000 per month, 12,000. 30% of DSA is part of salary. So wherever we need to consider DA, we'll take 30% of DA. That is 300. Let's say you have pension, or let's say you have gratuity, leave salary, we'll consider only 30%. But taxable would be entire 100%. Advance salary for the month of April, we already have done. Due or received, whichever is earlier. So advance has been received, though not due yet, but it will be taxable. Arrears, this also we have done. Arrears are an exception to due or received, whichever is earlier. Arrears are always taxable on receipt basis. So entire 20,000 would be taxable. House rent allowance, we provide an exemption. These are all hypothetical figures I have taken just to make you understand what is the format in which we appear if we have allowances in the question. Then entertainment allowance. See, we differ in treatment of entertainment allowance in comparison to house rent allowance. In house rent allowance, first we take the amount that you get, less exempt, balance would be taxable as we have been doing earlier in leave salary, gratuity, pension. But for entertainment allowance, we shall first include the entire amount in the salary. You get 36,000, you claim 36, you pay tax on 36,000. After we have computed gross salary, we have done this before, we have 3 deductions, and one of the deductions is entertainment allowance. So again, take a hypothetical figure, whatever comes out to be the amount, that will be deductible. And remember, we don't use the word exempt for entertainment allowance. Exemption is prior to computing the gross salary. And after gross salary, we use the term deduction. See, standard deduction. Deduction on account of entertainment allowance. So we don't say entertainment allowance exempt from tax. We say entertainment allowance deductible. Then we have medical allowance, see, fully taxable. We have research allowance, we have an exemption. So taxable would be 1,000. This is a hypothetical example of just trying to make you understand how do we go about proceeding with the question if you have all these things as a part of your salary structure. Now, house rent allowance. What is house rent allowance? House rent allowance, as I told you, is an allowance given to the employee to meet the expenses that he incurs on account of his staying in a rented accommodation. Only if you are staying in a rented accommodation. So let's say you stay in a rented accommodation. Need not necessarily be staying in a rented accommodation for the entire year. If you get a house rent allowance of say 5,000 per month, we have 5,000 per month. So how much of HRA are you getting? We are getting an HRA of 60,000. Let's say I don't pay rent. I'm staying in my own house, or I'm staying with my parents, or I'm staying with my friends, but I'm not paying any rent. Then what will be my exemption? My exemption will be 0. It's not that if you don't pay rent for the house, you don't get HRA. You will get HRA whether you pay rent or you don't pay rent. But if you pay rent, you are likely to get an exemption. Likely. Depends on the calculations. If rent paid is too less, then again we may not get exemption. But if you are not paying rent, for sure you are not getting any exemption. So taxable HRA would be whole amount. It's also possible that for 5 months you are not paying rent, for 7 months you are paying rent. So what do? 5,000 of HRA into 5. 25,000 would be fully taxable. This would be fully taxable. And for the remaining period of 7 months, we shall calculate HRA exempt from tax. So for remaining 7 months, you have 35,000. And on this 35,000, we shall find out the amount exempt. So whatever is the amount exempt, that will be considered to be taxable. Right? So 35,000 less amount exempt. Let's say it comes out to 4,000 as per calculation. So your taxable HRA would be 25,000 for the entire period of 5 months, and this 35,000 exempted up to 4,000. So if it's exempted up to 4,000, taxable would be 31. So the taxable HRA becomes 25 plus, we have to do it in parts. How do we find out the amount of exemption? Again, least of the 3. 1, that you actually receive. 2, we either take 50% of salary or 40% of salary, depending on where you are paying rent. If you are staying in a rented accommodation in metropolitan cities, Delhi, Mumbai, Kolkata, Chennai, then we take 50% or half of salary. Salary means what? Same as leave salary. Basic, DA, commission. DA if a part, commission if a percentage of turnover, and salary is on due basis. So no advance, no arrear. Because advance is not due, it becomes due when you work, which is next year, and nor do we take arrears because they were due in earlier years. So we consider salary only for the year that we are talking about. The basic DA commission is the salary that we take. Of that, we take 50%, half, if you are staying in Delhi, Mumbai, Calcutta or Chennai. Otherwise, 40%. So you have to be very, very careful about this in the question. If the question says he stays in Delhi, we take 50%. He stays in, say, Kanpur, we take 40%. And third is rent paid over 10% of salary. So we have rent paid, how much rent you are paying, minus 10%. Which salary? Same salary. The salary of which you have taken 50% of the same salary, we now take 10%. Okay. So let's understand this with the help of an example. X resides in Delhi. So residing in Delhi means half of salary for exemption purposes. Now see, this question also explains you to proceed with the question on salary. He gets a monthly salary of 20,000 and DNS allowance of 2,000 per month. And we say that DA forms part of salary for computation of retirement benefits. So wherever we have to take 50%, we take 50% of DA also. He gets a commission of 2% on turnover achieved by him, and turnover is 2 lakhs. So anyways commission is taxable, fixed or percentage, but again for 50% we shall take commission also. So we have a comprehensive case where DA is a part of salary and commission is also a percentage of turnover. He gets 4,000 per month as HRA. So what he's getting is 4,000, but he's paying a rent of 3,000. Now it's not that if he gets 4,000 and pays 3,000, 3,000 is exempt and 1,000 into 12 is taxable. No. We have to apply the rule that we have just discussed to find out the amount of HRA exempt. So how do we go about it? Basic salary. We are not just finding out HRA, we are finding out the gross salary. Basic salary 20,000 into 12, 240. DNS allowance 2,000 into 12, 24,000. And it is a part of salary. If it's a part of salary, it's always advisable to write it right there in the bracket that it is a part of salary. It's taxable anyways, part or not a part. But if you write here, you do not have to read the question again and again. Commission 2% of turnover. So turnover is 2 lakhs, 2% of 2 lakhs, 4,000. So this is taxable, this is taxable, this is taxable. Additionally, he gets HRA. House rent allowance. How much? 4,000. So total 48,000. Less we have to find out amount of house rent allowance exempt from tax. And how much of HRA is exempt from tax? We have just done. Depends on these three figures. HRA actually received, half or 2/5 of salary depending on where you are paying rent, and rent paid minus 10% of salary. So how much HRA is he receiving? 48,000, 4,000 per month actual. Since he's staying in Delhi, we have 50% of salary. And what is salary? Basic plus DA because it is a part, plus commission because it is a percentage of turnover. So 240 plus 24,000 plus 4,000. This is the salary that we consider. And so do we do also for leave salary and gratuity, not covered under Gratuity Act. So 240 plus 24,000 plus 4,000 is 2,68,000, 50% of that. Why 50? Because it's residing in Delhi. Okay. So this becomes 1,34,000. So first limit 48,000. Second 1,34,000. And third is rent paid minus 10% of salary. So rent paid is how much? 3,000. It's 36,000. And 10% of salary, which salary? Same, 268. So 10% is 26,800. So 36,000 minus 26,800 is 9,200. So what do? We have to take the least of the three. And least is 48,001, 1,34,002, 9,203. So least is 9,200. So out of this 48,000, exempted HRA would be 9,200. And taxable HRA would be 38,800. 48 minus 9,200. And you add them all together, you arrive at the figure of gross salary. So your salary structure here has only four things: basic, DA, commission and HRA. Even if the question is silent, to compute your taxable salary on this gross salary, we always give standard deduction of 50,000. So we are done with HRA, house rent allowance. Rest of the allowances we shall do in another presentation. Stop here.